Welcome to TradeTheNBI.com. This is John. This report is for the 11th of May. Well, yesterday was a fun one. Well, going back, we had positive extreme ending Friday's action. So we knew we were going to be retesting that low. Interestingly enough, we had this meeting of green and cyan, and as the day started, immediately rejected on the daily, and wasn't hard to follow from there. It just kept cascading lower, and you can see even in pre-market right now fading. This happens to be the 2A, just so you'll know. Deal campaign again would have from the yellow line, the DO fast, 4162. As we talked about, below that you start to get into negative territory, and again, this just revisits what I've always said about markets. When you reach these points of selling, they're very fast, much faster than the days up, and that you can wipe out weeks of gains in a day. Now, this was tiny relative to where we've moved, and again, still pointing out this low right back here of 40.21 as a fill of the positive extreme. We'll see how that worked out on the 50K chart of the S&P. On the ES, from a NASDAQ standpoint, we've talked about, well, actually, I wanted to mention this one other thing about the daily. We've been talking about this, where we get the shakeout, reaches the highs, and we start getting higher highs on lower shakeout readings. So we're beginning that move lower, and from my standpoint, when the gold line here on the shakeout starts to flatten, and particularly if you have Azure and Blue rising, when the Azure and the gold meet, that's when you start to think that, some, I want to say, wonky things can happen, but typically what you get is an even further fade, and particularly if you get a third one of these that starts to go, and if we dip into negative shakeout territory, we could see that fill of the positive extreme, and that would be expected. Not uncommon. And of course, the NASDAQ has been the weaker side of all of this anyway. It began fading earlier, and while it attempts to pop back up, you can see that selling. Now we're reaching 50%. This is interesting because you had this fill that took place yesterday of the positive extreme on the NASDAQ, but hasn't taken place on the ES. Now, institutions love these 50% markers as a turnaround buy, but you've got to be in a position where you've got something that promotes that. Now, of course, green is below red here, and red is holding up, but it's in that no spark zone, which I call is the negative 7.5 to negative 13 range, where the red DFC hangs out. Not particularly strong as far as just turnaround setup, so looking fairly weak. Of course, we have the dip to negative in the red category, so potential lift up could be enough right here around the 50% range. Probably would see some follow through past it, and then I would be looking for any build. And if you start to see a build coming back in there, then I think the potential for that to run back up is definitely there. But if we start breaking below the 50 and you don't see any significant turnaround, of course you'll see it on 5K and 50K much earlier. From a gold standpoint, still up at its peak levels and well underneath red, always a buy category. And the euro, again, taking off because, again, that soft job print may have been a little misleading, I think, to some people, because the reality is that government numbers these days have really become so massaged that they really don't account for anomalies and things like that very well, particularly when they're averaging in all these smooth curves in it. There was probably a much bigger job print than they recognized, and I think there's been some talk about that the next report coming out will probably show those significant gains. And if that's the case, then you're not going to have stimulus, you're not going to have more money flowing in, and while you get all these S&P projections of future growth, they're all predicated on the idea, and this is the same thing that happened back in 2007, 2008. Keep getting these strong economic reports of earnings and growth, and then the analysts start projecting that into the future as though that's always going to be the constant. And of course, it never is. And then the reality sets in as those, stimulus monies and that fade. There's no new buying power, and then all of a sudden, there's a complete reversal. And those that are ahead of that start seeing it and get out early. Now, of course, here's that 50K. And so this is what I was talking about as the day was progressing. Pointed out we had from Friday's action, positive extreme, right back here to the 42.10 range. Not that big deal. But then there was this line back over here, all the way down at 41.72 3/4. I put 74 when I marked it just for the benefit of it. And so I was pointing that out as we were beginning the fade going through, and from a 50K standpoint, it's much broader. But you can see how, these 2 days pump and boom, just completely wiped out. In fact, we're now in the pre-market getting very close to, complete 100% retrace of the push. So, and that happens quite often, and just it's confusing to a lot of people. Intraday, here's where we're at from a post-market, and already seeing significant size in this post-market, given the fact that oftentimes you maybe get 5, 6, 7 Mars before the market opens. Here you're already more than double that. If we shrink this up a little bit, we can go back to some of what was happening intraday. As it was pretty exciting because we were pointing out a couple of things. I'd had these magenta and cyan dots coming in through. And what those really represent is anytime we see the blue dip below, the yellow MBI dip below blue, you're in a period where you've got an extreme oversold kind of setup, but it's lacking any real authority. And usually you look for that first pivot rise here in the blue, and you expect that not to be successful. What you're looking at secondarily are any resets of the steel, particularly where green, in this case, moves above cyan, or you get a move of the steel back to the zero, and that resets. And that took place right about here. We had the earlier signal right about in this place where it happened, and that was just coming off a couple of adjustments. This happens to be, again, a pink 2A. And where you look for a continuation as opposed to a failure is right here. As we pivoted lower, you get the move up of yellow. And that usually gives you a sprint coming across, which usually holds price up quite nicely. And so I always look for that, because where you're going to get continuation selling is when you get this straight down movement, and that's it's worth noting because it plays out quite a bit. Similar thing happened here as we rolled over and we started to cross. It faded off a little bit, but still held up pretty well because you didn't get that cascade immediately of the yellow and that fading underneath. In this case, blue was already under green, which already indicates weakness. Here you have just the opposite, where blue is on the top side of the green. Breaks down below right as you get your final pop, and that just held it up for a little while, and it was just wait, and that's it was boring. But the OC spread took place right about there. At the same time, you'd already had the blue under the gray line there, as well as yellow under the magenta, and then it was just a matter of, not yellow under the magenta, yellow under the orange line, which is just a variant of the orange. It helps for identifying directional momentum, and then the magenta being below. So the earliest signals, from this, if you're very aggressive, was back up at the 27 range. And then from there, literally cascaded lower, and then we started to get continued weakness as we just weren't able to see any movement back above the 10 from a blue every time we were getting an attempted crossover. We were just staying weak, and usually I look for that change when you get, usually the yellow will pop up over the green, even if it's just momentarily. That's usually the beginning of some kind of strength. And even though we were getting some pretty low reads out of this, never popped up. That's part of the code change I'm going to be making on some of these dips, where we know that we've had new lows being made, and you get that kind of setup where you've had the dip, and usually what this is measuring is within like the last 7 bars, because it's not going to be predicated on dip of the orange or even steel moving up above, particularly when you're at this below negative 13 on the shakeout. That's why I consider that dark red. And that came across here. We had the potential for a build, but because we had dipped below the yellow, and that took place, it was one of these going, I think it was right here, 420, 479. It held up pretty decent all the way through, but right here, 196 to the 224 of the blue. So that was the dip. So I'm expecting that this first hump is going to fail, and then I'm looking for this move right here where it begins to fade, and that gives you a secondary clue that you can exit your long, or just make sure you got a pretty tight stop, because if you don't get it turned back up pretty quick, it's not going to do anything. Since we weren't getting move until right about there, came back at the same spot, so there was a potential that we could build, and it held on quite a while throughout that, because of this reset here with the DOC, where you had the green go above. But as soon as it separated, we were just in a continued soft roll, and when the secondary one, you can see it turn magenta on the blue line, and that was the signal right around 41.94. And like I was pointing out, we still had that 50K at 74, and before the end of the day, well, we got down to 72, which filled that 50K chart perfectly. And again, right about here, we had a 0.06 yellow and the blue at 4.7, so that was the dip. So I'm expecting that this up move isn't going to do anything, and to stay with that to the negative side. And sure enough, that's exactly what it did. And similar move right here to the orange. Still decent, because again, you know you're going to get a little bit of a pop with it, but with no reset and no bounce above. It finally did do that right about here, but then it rolled over immediately right after it. But even from the orange signal at 57, you jumped up to a high of 69. So within that, it's hard to deny that that's still a decent play, and someone looking for 5-10 points, not bad. But still recognizing that you've got to be a little bit tighter with that when you have this kind of configuration, and so you've got to be prepared to have your stop and collect some type of gain on that. And sure enough, as it rolled over, that's where we're at right now. And you can see the build right now taking place, coming off the lower lows. So still has some more work, but we have the DOC reset right there where the dip below zero. So a move underneath here, like we're seeing with the orange, viable from a higher move. So just throwing in some of that more precise detailing as you look at these, just so you can get a better understanding of where we're taking the program and the ideas behind some of these concepts. Because even within what is a negative trend, some of these little buys can still produce pretty decent intraday move, and I'm reluctant to want to completely eliminate that. What I'm going to do, though, is be able to identify which ones they are, so you can place a much tighter stop and collect some of the gain off of it before it then converts and flips back. So there you have it. That's where we're at here to start Tuesday. Trade well, and we'll talk to you later.